Hey traders, this is Trader Tim from eminimind.com doing a trade recap video for the 4th of November 2019. And today's video, we're going to talk a little bit more about swing trading versus day trading. The last handful of days, you can see on the my ES chart here, we've had a lot of gap ups, and it's getting to the point where I think I'm going to have to get rid of my gap lines here and just use my legal pad where I've got them written down because the chart's getting pretty cluttered with unfilled gaps. I mean, we go all the way back down here to 2763.75 that is still unfilled. And just because we have all these gaps below us doesn't mean that we're going to go straight through all of them at once. And given where we're at in the year, early November, consumers get in a pretty positive spirit and mindset November and December. And, if you go back to years where the market was not doing very well, November and December tend to give a lift just because folks are in better spirits. And so, with last week's economic numbers showing strength, we've got a lot of potential to continue on higher, and that's kind of what we've had the last couple of days. Up here, this dotted line is my negative 23% that I use as my target for this extension or this retracement rather. That we've made kind of a new high here, and then the double top, and finally tagging that negative 23. Usually, I look for signs around a negative 23 on a big daily level for a reversal. But in this case, we've I'm I'm looking for us to maybe go up to the 3200 level towards the negative 61.8 of the larger um, daily here. And if I go way out, go to we'll go to a monthly. You can see the monster retracement from 2016 to 2018 highs, pulled back in the middle of I guess the end of 2018. And that target is also at 3200, just above it, 3215. So we've got some real potential here and momentum, which is, really the key. The momentum going into the end of the year, 2020 being an election year, lots of potential to go higher. Now, that's all well and good. How do we use that daily analysis in our intraday trading? And you really don't need to look at a daily chart all that much throughout the week. It doesn't change a whole lot. And so, getting an idea of where are the prior day's high and lows as we open for the morning, where are, support and resistance levels to the left from where we're at. Those are really the main things that I'm looking for. And then, you can zoom in to a smaller time frame and kind of disregard any of the daily charts throughout the week. Now, as we sit up here and potentially keep having these gaps, and you know, today's candle was certainly a bearish close, even though we gapped up in the morning. Intraday, it really didn't give me a whole lot to go off of. I was having a hard time this morning trying to put something together on the 512 tick chart. Same with the 5-minute chart. When you come in and you get the gap up, I'm immediately looking for bracketing the first 5-minute bar, but it needs to trigger on the next candle. So if I'm going to put a buy stop a tick above highs and a sell stop a tick below lows, it needs to move one of those directions on the very next candle. Well, today, we made the low at 79.50, and the next candle was 79.50, and then finally the third candle ended up breaking. But if we don't break right away on the next candle, I just pull my order because I want to see that follow through and that decisiveness right off the bat. And then we just kind of drifted a little bit, and then drifted a little bit to the upside, but not really enough of a range to, short at highs and buy at lows and be able to capitalize. The other thing about today, if you look at a 30-minute chart, the first candle, um, a pretty small range, and so I'm thinking, okay, we have a good chance to go into a trending day from here, from the first 30 minutes on. But then the next candle, basically, we started trending lower and then closed higher with the tail to the downside, the body that was about the same size as the first candle. So I kind of see that as a failed attempt at a gap fill, if you will, or a failed attempt at a trending day. So no trades for me, no day trades for me today. But what I wanted to touch on are the swing trades that have been building, if you will, that I put on in the month of October that have finally, really done quite a bit. So the one short that I was still in got taken out today, CBS, and just looking for weak stocks in downtrends. So we always coming back to the SPY and saying, okay, what is the trend of the broader market? In this case, we kind of got the shape here, generally up and to the right. Uh, about a 45-degree angle with this double top in here. So when I come to a stock like CBS, I see, wow, this is relatively weak compared to that SPY chart we just looked at. So this one was a short back here on the 4th, rolled over, and then bounced. And then once we rolled over again, I just kind of brought my stop down, brought my stop down again, and then this is where um, I got taken out above this inverted hammers high today. So that was the last short that I had. But the longs, I'll just run through them here. CHTR, a lot of these will look very similar. We've got the pullback. This one was, let's see, this one was the 14th. A lot of these are around the 14th and around the 25th because that's when we had the pullback and then we broke above that low candle the next day. So CHTR looking good. Today's candle, about the same as what we saw on the S&P, kind of a bearish close. CTBB was another one that was long above this hammer here, and it didn't really scream higher. It's just sort of been a very shallow grind, and notice how it didn't break the high of this big body candle here. I do have my stop underneath the big body candle. Everything else has been inside following it. Um, Next one, CTDD. This one did do a much nicer push higher. Same entry on the, well, actually, this one was on the 8th, and it's had a lot of little pullbacks, little pullback, and so just bringing the stop up underneath each of these pullbacks currently right down here. And if we make a new high, in this case, I would bring it up underneath this candle because this is the big body bigger candle with the inside bars. Anytime we have a couple of inside candles, I don't tighten my stop underneath those candles. I do it underneath the initial breakout bar. Next one was GNRC. This one was a 1014. It pulled back, rested on top of these highs here, and then the broader market was breaking out as well. So same thing, big body candle. My stop is under here. Couple more. Now LULU, LULU. This one I was taken out a couple days ago, but I wanted to talk about it because again it was a 10-4 entry above the hammer, and it started nicely, broke highs, but then kind of went sideways. And in this case, when the market kind of makes a new high on this guy here and then starts to go sideways, but the broader market is going up, at the point right here on the breakout, my stop was right here, and so that's where I got taken out on Friday. over here. So relative weakness showing in LULU here. MAA still looking strong. This one was a 10-1 and then the 10-2 entry. Same thing, pulled back, new high, pulled back, new high, looking good. And then the last couple, Nike was taken out a week ago, and same thing as LULU was looking really strong. This one I took here on the 9th. The 8th was the signal bar, and it was maybe not the greatest of trends, and so I wasn't super surprised to be taken out below this candle here. And then the last couple that I've got. So you can see, obviously, out of the basket of a dozen swing trades, I only had one short left because the other the other shorts got taken out as the market was going higher. And so by having a basket and letting, if it's a really bullish market, having more longs, if it's a really bearish market, having more shorts, if you're kind of undecided, or if the market's neutral, you can kind of be 50-50, and then the market gets you uh, kind of directs the way the portfolio tends to trend as the positions unfold. And TRA, I've still got my stop below the swing low here. We did dip, but I didn't quite get taken out. I usually use 20 cents, or if it's $100 or more, I'm closer to 40 or 50 cents as my stop, just to give a little wiggle room. And yeah, that was it. That's the last one. So that's what I had for swing trades. That's what I still have, except for Lulu and Nike. Um, Home Depot, we've talked a lot about in the trading room because that's something I'm in and out of a lot. Not making a new high, and you remember the S&P is making a new high here. So relatively weak, a little bit suspicious on that one. Stuff like Home Depot and those types of big box stores tend to show a lot of strength when the economy is good because people have money, they're doing remodels and dressing up their house and all that fun stuff. So I was a little bit surprised to see Home Depot kind of show some relative weakness, but that's what I've got for swing trades. And remember, always bringing it back to the SPY. So when things might be a little slow in the day trading side of things in the ES, you've got swing trades to balance it out. It's a really nice combo. If you're gonna be a full-time trader, or if you're gonna, try to develop as you think of yourself as a hedge fund manager or a portfolio manager, that's a way to diversify without just taking the same day trading strategy and trying to apply it to 50 different markets all on a day trading time frame, trying to execute all morning long. That can be a little bit overwhelming if you're looking at, even if you're looking at 6 different charts, trying to put on trades in 6 different markets can be challenging at times. So with swing trading, a lot of my analysis is at the evening, or at the market close, just kind of running through my watch list and um, doing some stuff after hours to get ready for the next day. So there's not very much overlap with day trading and swing trading. So that's another reason I like it. Tomorrow morning, Tuesday, live trading session, and that will be right at the NYSE Open. Daylight savings time for everyone except us here in Arizona, which means our markets open up an hour later, whereas everybody else's stay the same. So we'll talk to you tomorrow morning. You can check out or tune in to the live trading session and ask questions there over at eminimind.com/VIP. Thanks for watching.